Ding, 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 gather round. You guys are going to love this. You know, I've talked many times about how technical analysis is a complete lie. And the truth of it is that it's a marketer's dream. Basically, technical analysis is a scam and it's a fraud. Let's play some of this video and I'm going to interject here. It's going to be great. Let's roll.
When it comes to trading, there's something even more deceptive at play: charts. Now, this might sound really strange, but it's because of the charts themselves that many trading marketers can separate people from their hard-earned money without really having anything decent to offer in return.
Now, this is exactly what all of these people are doing. Okay, everybody, and I'm not going to mention names, but you know who they are. They're selling you signals, courses, everything. It's a marketing scam. It doesn't work. Now we're going to go deeper into this. Now there's one thing I want you to take notice of, especially when you watch crypto traders on YouTube who are not really trading. There's a couple of ways they go about this. The wording, pay attention to the wording. I want you to look for words like if this, then that. In other words, we have a bearish wedge, which could break to the upside. And if this happens, that could happen. But if this happens, that could happen. Pay attention, people. You're being snookered. Let's go and listen to a little more of this, and I'm going to jump in.
You see, I think the charts are similar to clouds. If you speak to a nephologist, the clouds and cloud formations can reveal a lot of information. Yet someone that knows nothing about real cloud formations can still peer at the clouds and maybe see an elephant, or a house, or an Instagram trader. The reason we see these shapes is down to something known as the clustering illusion. This is the tendency for us to find streaks, clusters, and patterns in random distributions and consider them to be non-random. It's just the way our brain works. We don't deal well with random and we desperately want to give things meaning instead. Now the same applies in the markets as well. I'm not saying that the charts are random, because they aren't. However, using random data is a good way of testing whether a theory about the markets holds any weight or not, and that's something we'll get onto in a second. But first of all, I want to explain to you what it is that I'm getting at with the clustering illusion. You see, there's one type of technical analysis that is the best friend of trading marketers, and it allows them to really take advantage of people's cognitive biases, and that is chart patterns. I'm sure we've all heard of the traditional chart patterns that are taught in every free online resource and every technical analysis book going. Things like head and shoulders patterns, bull and bear flags, ascending and descending wedges, double tops, double bottoms, the list goes on and on. Although it's unclear exactly when these patterns were first discovered, or who discovered them, they were definitely already in use almost 100 years ago when described by Richard Shabaka in 1930. They're nothing new, regardless of what some online companies may deceive you into believing. They're not something that someone online has discovered. In fact, these patterns are probably amongst the oldest and most popular ways to trade based on technical analysis. They're accessible, they're easy to learn, and they make you feel like you've really figured out the market. The problem is, they are also pretty much useless.
All right, now listen to a little bit of what this guy has to say.
Will currently be trading using charting patterns, whether profitably or not. Perhaps you're still learning.
Did you hear that? Whether profitably or not.
And if you are using charting patterns, then the chances are you've been convinced to use them by some know-it-all trading marketer, and they've probably told you about all the
Did you hear that? Trading marketer. That is very different from a real trader. A trading marketer.
benefits of charting patterns and how successful they are, and the facts that I'm about to present to you will probably oppose some of those things that you believed to be true before, and therefore it can be quite difficult to digest. There'll be a certain amount of cognitive dissonance, you won't be able to accept it straight away, and you'll probably have all kinds of rebuttals and, what about this, yeah, but this and that. And
I'll tell you, this is why I have an easier time teaching someone how I trade in my one-on-one consultations, and if they know almost nothing. Because I have to completely, if you think you're a trader, if you watch or study technical analysis, none of what I tell you is going to make sense to you. I have to reprogram your brain, okay, to understand how this works. Let's listen to a little more of this.
What I'll try to do throughout this video and the next part is to address a lot of those questions that could come up and I expect to come up. So I know it can take some time, but just bear with me and I'll try to address as much of that as possible. And you know, I'm not presenting this to you to try to be smug or anything like that, because believe me, I have been there before. For decades, people have been saying that chart patterns work and been using them because they think that everyone uses them and that's the right way to trade. And so when I was learning, I thought I was really onto something when I learned these charting patterns, only to find out that I'd wasted a lot of time learning them.
A lot of time and a lot of money. You see, I can tell you anything I want, and you may or may not believe me. A lot of times I do on one of my other channels something called Trader's Digest, where I'll show clips of other people like Dr. Williams, who created the fractals, where he outright says that technical analysis does not work.
I do know some people are going to be saying that so-and-so is trading using charting patterns and they're incredibly profitable, and I will be addressing that as well. We'll be talking about this chart here that you see on screen, which may well be the most important P&L chart you ever see, and I think we can all agree that if you see a P&L like that, then you probably think that's a profitable trading system and you'd be happy to invest your money into it. So that's what we're going to be discussing in part 2 of this video. There have been many independent empirical studies over the years on the chart patterns that I mentioned and many more. The aim is to find out, firstly, whether they genuinely do have any predictive power, and secondly, whether they actually provide any form of profitable edge. When you look at these studies, they've been conducted by all sorts of professors and academics using a very objective and neutral approach. Even the New York Federal Reserve have conducted their own studies on these patterns. However, the only convincingly positive results come from people with a vested interest in showing you that they work, the people trying to get you to part with your hard-earned cash.
Bing, ding, ding, ding. It's so true. Selling you courses, selling you candlestick courses, selling you charting courses. Do I need to mention names? You know who all of them are. And then the ones that sell you useless trade calls. None of this works. Did you ever hear that 90% of traders lose money? Well, guess why? 90% of traders are studying technical analysis.
Unlike the academics, they certainly haven't bothered to detail their testing criteria or be critical of the process that they've used to test it and how to improve that process. They just present the outcome. Surprise.
Oh, bingo. Did you hear that? You may want to watch this again. They just present the outcome. I don't want to mention his name, but there's one YouTuber who does a supposed nightly live stream, which is never live. Pounds on the desk. You know who it is. He always covers himself. If this could happen, then that might happen. All that kind of stuff. Let's listen to a little more of this.
Surprise, surprise, it ends up being positive. So instead, let's look at the outcomes from neutral tests. People who had no vested interest in showing these patterns work or don't work. Now, it's really important that I point out to you here that I have absolutely no reason to be biased against chart patterns. If they worked, if they were genuinely a profitable way of trading, I wouldn't be against using them, I would be for using them.
You know what? If they worked, I would be teaching you how to do it. I would be packaging it up in a nice package and presenting it to you for X amount of BTC. But they don't work.
Study after study, whether it was bull flags, ascending wedges, double bottoms, head and shoulders, or anything else, always showed abysmal results. These results weren't just below standard in a way that could be improved with some optimization or experience of the charts, they were actually completely random at some points. These patterns only present positive results when the study had some sort of underlying factor that was also contributing to it. For example, in some studies, they were testing in inefficient markets or relatively new markets, infant markets, and they found that there was a certain element of profitability with these patterns. It may have been that they were a self-fulfilling prophecy, and to a certain extent they were profitable because the markets weren't as efficient as the more mature markets. Or in some cases, the actual approach for testing was not quite correct and it was critiqued. And when it was improved upon in a later study, then it was found that the results fell in line with what was being shown from all the studies before, which is that these patterns are simply not proving to be profitable.
It also goes into the fact that a lot of it is like a self-fulfilling prophecy. When people see, the head and shoulders pattern on the chart and they all start piling in, it's not that it makes it work, but it just increases volume and activity. And activity does not always mean profitability.
To be completely blunt about it, in study after study from different, very respected people taking a neutral angle on this, it has been found time and time again that these patterns are simply not profitable in the way that these trading companies are promoting them to be. If you take an objective approach, testing under scrutiny, these patterns are being proven to not work. The different studies focused on different key points. But broadly, the three similarities across most studies are that firstly, the same chart patterns you find in real price charts would also appear in randomly generated artificial price data. This is
Random. Following technical analysis, you have as much chance to win as you do on the spin of a roulette wheel. And this is the truth. If it worked, I'd be doing it, trust me.
Something I referred to earlier when I mentioned the random data when we spoke about the clouds. Basically, if you're finding the same patterns exist in completely random data, where the movements in price have absolutely no significance, it should tell you something about how these patterns emerge. In other words, they don't emerge because something is leading to them being that way, like the pattern means something, they are just random occurrences. Secondly, following on from that first point, the number of times that the patterns appeared and the characteristics of the returns after they appeared was very similar between the price data that was real and the price data that was randomly generated.
Do you see that? There is no difference. There is no difference at all between random and real data.
This means that the patterns themselves were not significant. There was no difference between what was happening with the real price movements and the fake price movements. In other words, they had no meaningfulness in the market. And finally, some of the patterns were seen to have predictive power, which is a good sign. But unfortunately, not a good enough sign, as this predictive power was not in a way that could generate any sort of profitable returns. This may mean that the self-fulfilling aspect of these patterns is having a minimal reaction in the market, so it is having some sort of reaction, but not enough of a reaction to move the market in a profitable way. To sum up that last point, let me give you an example from a study that was conducted at the New York Federal Reserve, which is obviously a much more reputable source than Scam Trader FX that you're following on Instagram. They found that with the head and shoulders pattern, which is one of the most popular and apparently credible patterns, activity increased when the pattern appeared, but this was no indication of profitability. In fact, in their own words, head and shoulders patterns qualify as noise because the associated trading strategy is unprofitable.
Do you get that? Read that again. It qualifies as background noise, as noise, because the strategy is unprofitable.
Patterns are not profitable even when used under different market conditions and with slightly different approaches. There is one massive benefit of them. It's really easy to show them working perfectly in hindsight.
Oh, how many times have I told you about hindsight? It's almost like when they come on and they tell you what just happened or what happened yesterday. Nobody tells you the future. The past doesn't matter. There's no correlation. My strategy is very different. And the only way I get returns like I do is because I'm able to predict the future in the 1-minute chart. And it's very simple. It's game theory. It's very different.
Also trick traders into thinking the approach overall is profitable even though it's not.
These guys, I'm going to say names, the Philicones, the Kirbys of the world, all of them are getting rich, but not from trading, from selling you different programs and educational garbage, nonsense, fluff. Every time you lose money, every time you order a course, every time you join a VIP group, Okay? You got somebody like this going to the bank.
And scammy marketers love that. In fact, the studies into charting patterns did come up with many conclusions about why these patterns are so popular and why so many people still think they work despite them being proven to be unprofitable. The first one is one that I mentioned earlier, the clustering illusion. Remember the analogy about the clouds? Well, this is why the studies were also done on random data and not just real data. You see, if the same patterns appear in random data and have the same outcomes as with the real data, the chances are high that the results are altogether random. That means that there is no predictive power with these patterns, they're emerging in random data. The next key reason for people believing that these work is related to overconfidence. It's been found that the majority of investors and traders believe that they have superior information to other market participants and therefore don't realize that they're being overconfident. This displays itself in a combination of two biases. The first is self-attribution or self-serving bias, which we discussed in a previous video in 2018. This is where a person assigns success to their own skills or the own system that they're using and failure to external conditions. And the second bias is hindsight bias. This is closely linked with confirmation bias and is the tendency to give emphasis to information that confirms rather than contradicts your beliefs. It's otherwise known as the "I knew it all along" bias. This means that when you spot one of these patterns in the charts and it doesn't work out how you would expect it to, you might not pay attention to it so much, or you might assign some other reason to it about why it didn't work out, some sort of external reason. But when there is a pattern that does work out, when it does exactly what you would expect it to, you'll look at it as if it's confirmation that Scam Trader FX on Instagram was correct and it's a great trading approach. In addition, it's been proven, there are also reasons why these patterns can appear to be profitable even when they're not. And this is the same with many trading methods that use vague entry points. They'll have a zone for entering a trade rather than a precise point. They will then have a big stop loss and a big profit target, like 10 to 1, 8 to 1, something like that, so that the price can float around and eventually hit one side or another. When you make these trades asymmetric, in other words, if you profit, you get 10, and if you lose just 1, it means that even if you're losing money when you're learning to trade, you're a losing trader, you can still feel encouraged because the occasions when you hit a profitable trade and you get 10 compared to the ones that you're losing, you can look at it and feel like, well, in that case, all I need to do is get better at identifying the correct patterns and I'll get a lot more 10s and I'll be profitable in no time.
It's all a lie. It's absolutely ridiculous. Now let's roll around to how I do it. So the question comes to, how do I get returns like this? 200%, 300%. It doesn't matter the contract size. It's showing you the entry points and exit points. 372%, 466. These are all individual trades. Look here, 509, 572. So I'm going to tell you how this works. It's very simple. This is like a game. Anybody you see that has their screen all blacked out and millions of indicators is not trading. They are not real traders. Okay? Now, the idea here is to be able to time it just right, catch a move, get in, ride the wave, and get out. You do not want to be looking at daily charts, weekly charts, none of that. How many times have you gotten into a trade and you've been stuck, down 30%, stuck for days? You can't get out of it. We don't do this in leverage. You need to realize, okay, that this does anything, Ethereum, any of them, does one thing. It goes up and it goes down. Most of you lose money because you think that it's going to continue going straight in one direction, being up or down. No, you need to get in, snipe your profit on the 1 minute chart, and get out. This is a game of war. This is why the people that I teach personally, and I don't make a course, I don't sell a video, I could care less. Okay, I do a one-on-one consultation. Everybody knows it's 0.15, okay, of a BTC, and I talk to you through the computer, just like we're sitting across from each other at a table having coffee, and I show you my screen. And if you want, we can even do trades together. The problem is when you stay in trades. Whatever gains you have going this way are eventually going to be lost when it goes that way. You need to know how to get in and out of these charts really fast. Nothing else works. And I don't call it technical analysis. In my world, it's tactical warfare, and it's simplified. I have a better time teaching people who know nothing, the average guy who know absolutely nothing about trading, than I do someone who's studied all the technical analysis, because they can't get that programming out of their head that it just doesn't work. Well, if you want a consultation, my email address is down below. It's the last money you'll ever spend with me or with anyone to learn how to do this. And you don't want to be staring at a screen all day. Any idiot with 4 or 5 computer monitors is a douchebag. You don't need that. Okay, I trade right from my laptop. I have a laptop, a wireless keyboard, and a mouse. It's all we need. I'm going to wrap it up here. Subscribe to this channel. Hit the notification bell. And make sure you read the description box under the video. Have a good day.